dying Christmas tree.
Yes. It's a bacteria. Oh, shoot, we're live.
We are now live. Hello and hi, everybody, and welcome, Noodlers. This is the Wholesale Real Estate Investing by SAHA, number 210. Yeah, 210. There's a whole lots of good information back there. 209 other episodes worth. I'm Paul Romero, and I'm hanging out from Lake Tahoe, California here today in a nice snowy, clear skies today, but we're supposed to be getting pounded tomorrow again. Should be interesting. Where are you hanging out from? We always want to know where you're hanging out from, who you are. Type it in. Let us know who's hanging out here on the Hangout with us, gathering up all these golden nuggets of wholesale real estate knowledge. And my partner, business partner, John Loyster, is with us today. John, where are you hanging from?
I'm hanging from Phoenix, Arizona. Welcome to the Hangout. Thanks for having me on here, Paul. Yes, today I think we're going to have some really awesome information to share with you that hopefully, if taken and applied, could bring you financial freedom, personal freedom, and freedom from bullshit, really, because we're here today to kind of expose the truth about a few things going on out there in the economic world and talk about why today, why now is one of the best times to get into real estate. That's right. And especially in the opinion of Paul and myself, it's a perfect opportunity, probably one of the last great opportunities for people to get involved that have no money to come and get involved and become millionaires in a relatively short period of time if they come in now to learn wholesale real estate. We're going to kind of break down some information today about why that is. And again, you know what? This is informed opinion. Everything that comes out of my mouth and Paul's mouth today, it's informed opinion. Do what you want with it. You know, as T. Harv Eker says, don't believe a word I say. Take this information, verify this information, think about it, roll it over in your own mind, and come to your own conclusion. That's all I can say. But with that, welcome. It's Freedom Friday. It's the 8th day already of the month of January. We're on our way into this new year, 8 days in. So, yeah, welcome.
Yeah, our objective here is just basically to get this information out to you, okay? Like John said, you can do whatever the heck you want with it. I don't care if you flush it down the toilet, but you know what? You can't make a decision. You can't make any kinds of changes. You can't do anything if you don't have new information, and that's what we're doing here. We're just providing you with some new information, all right? And as John said, the title of today's show actually is, why now is the perfect time to get into wholesale real estate. The other title that I was going to put on here today, I had to do a little toss-up here, was going to be, what the hell is really going on? Can you say 2005 and 6? That was going to be the other title I was tossing around here. I wasn't sure which one to go with, but that's exactly why this is the perfect time to get into wholesale real estate, because what happened after 2005 and 2006? Yeah, exactly. The boom, the bust, the crash, and what happened to the wholesale real estate, or to the real estate market, the price of homes, dirt cheap. And what was the problem that people had? Nobody to buy, couldn't sell, right? What a perfect storm for wholesale real estate, don't you think? If you're a guy who can step in and walk up to a person who has nobody, who thinks that there's nobody out there who can buy his house, and you're standing there at the door going, hey, I can buy your house. What do you think his answer is going to be? Oh yeah, let's do this thing, right? So that's why it's so powerful that right now is such an awesome time to start getting into wholesale real estate. Not necessarily that this market right now is the greatest time to be wholesaling. There's nothing wrong with it, because you know what? That's what's so awesome about wholesale real estate. Doesn't matter if the market's up or the market's down. Wholesale real estate is still good. It's a little bit better sometimes when it's down, but it's still good now. So getting into it now, getting educated now, getting yourself positioned for what's coming, to have yourself in place to really make it happen when the super powerful, awesome time hits. That's why we're talking about this is such an awesome time to be in wholesale real estate. So if you have any interest in that, if you want to be in the right place at the right time, and along the way between now and then become the right person, then you're in the right place.
That's the bottom line right there. That's the bottom line right there is, you know, right now kind of there is a perfect storm, I believe, heading our way. And this, like, again, this is my opinion based on information that I read and I'm looking at and experiencing firsthand in this market. It's an interesting perspective that you can gain on things when you really are deeply entrenched in a market. Like if you're a stock guy and you're looking at the S&P and the Dow and all that other crap that I really don't know about, you are watching those graphs, those charts, the pricing, the profit and earnings ratios. You know, you're looking at all that stuff when you're day trading or you're buying stocks for a long-term position. You're studying that market. So as someone who's studying a market, you become, after 10,000 hours of studying anything, you become an expert. You become an authority on that. That's what they say anyway, 10,000 hours put into something. You could see the fluctuations. You can begin to see the history and the patterns that are involved there. And if you're someone who's a student of history and news, like kind of Paul and I are, you also see what coincides in the media and in the national or global economy. You get the macro picture of what's going on surrounding the fluctuations in prices and stuff. So that brings me to the fact that Paul and I have a unique perspective over the average Joe that can go out and simply just read articles, is that we're actually looking at pricing on a daily basis in Phoenix, specifically in the Phoenix market, but it is a microcosm of what's happening nationally. Every market has their little different twists and turns, but the National Association of Realtors is really trying to push an agenda here to kind of manipulate the entire U.S. market, which they're kind of doing in pricing. We'll get into that here in a minute. Paul and I get a unique opportunity to look at pricing daily, different neighborhoods all over town, indicators of economic situations, different markets, different jobs of people living in those markets, and what's happening with the pricing, where it's going, and where it's being the attempts are being made to artificially inflate those prices are obvious to people who look at this stuff every day. So that's where these opinions and these, this informed opinion comes from.
Well, when you go out and you get a deal, you land a wholesale deal, right? And you go out and you go to do your comps on your property, and you see that if you've got any sense at all, if you know anything about wholesale real estate at all, and if you don't, here's a little tip for you. When you're doing your comps, you're comping your properties to the ones that have been sold already, the sold properties, all right? Because that's the only thing that you have solid data on, what people are actually paying for property in that area. Okay, so you're looking at your sold properties, right? And when you go to do your comps and you look at your sold properties and you see that all the houses are selling at $100,000, right? But then all the similar comps are selling at $100,000, and I mean, we're talking ones that have sold as recently as this past month, the month prior to that, and the month prior to that, the 3 months coming into it. They've all sold for right around $100,000. But then you have 3 properties in the area that are now listed, very similar houses that are now listed at $125,000. What do you think the problem here is? And who's the culprit? And just like John was saying, the National Association of Realtors, the real estate agencies, the forces that drive all this stuff, whatever, they are on an agenda right now to drive prices even higher than they are right now. I mean, prices right now are already at the point where they're basically almost unaffordable to the average human being. So why do they want to drive prices even higher to where, why do we want to drive prices out of affordability? You got me. I don't know what that agenda is. Build another crash, another bubble and a crash, 2005, 2006. Hey, there you go.
That's one opinion. I kind of think it's funny. What people don't realize is that, okay, on one end of the spectrum, this is what's going on in real estate pricing, okay, price fixing. And people don't get the connection to some of the other things that are going on in other areas, such as, my opinion, or what I've seen is recently, what is the Federal Reserve chairperson Yellen just came out and did? Raised interest rates 0.5%. Okay. So what's the National Association of Realtors agenda here by driving up prices? Is they're playing on people's fear that, oh, shoot, I got to buy a house right now because interest rates are historically low and the Fed is now moving up interest rates. So I better buy a house now before they really hike up interest rates. And so in response to that, let's raise the house prices of houses to play off people's fears. Except I'm going to say that I don't believe people people in this regard aren't as ignorant. Oh God, I can't believe I'm saying this because it's probably not true. Paul can throw in his opinion here. I'm throwing opinion out, and I'm actually about to disagree, I think, with what's coming out of my own mouth. But I was going to say, I kind of get the sense that people won't, I'm hoping that people won't be as ignorant this time around and buy into this price fixing that's going on and get scared into buying houses. Because we're now asking 120. It was literally listings 80, nothing sold over 80 a month ago, and somehow it magically went up $30,000 for a house. But interest rates have gone up, which means people desperate to get in before interest rates go higher are who they're playing this to. Except there's one problem with it. People I don't know if it's the ignorance of people that aren't going to let this happen again. It's the bottom line is the paychecks, is the money people have. It can't go that way again because people don't have the money and the easy credit like they did in 06. So I kind of think we won't experience a major run up in real estate prices because it can't be afforded or sustained.
But then again, too, I mean, things going on with the lending has been loosening up. I mean, I've been hearing talks in the last 6 months of stated loans, stated income loans coming back, and all these different types of things, making it easier for people to get housing loans again, just like they were doing back then. I mean, obviously they're not. There's a lot more restrictions with the banks and different laws that have passed, TRID and things like that, that everything has to go, perfectly accordingly, just right. But if people do actually, qualify and afford, the lending has gotten easier to try to get as many people as possible back into the housing game there. And, housing is definitely, associated, housing prices and what goes on in the housing market is definitely, associated to what happens in the stock market, because the stock market is kind of where, what happens in the economy and things like that. And, I mean, what caused the Great Depression of the 30s was a stock market crash. And what happened to the price of houses then? They collapsed, right? So it is tied together. I want to read this Facebook post here that was posted the other day by a friend of ours. I just want to read this really quickly. It says, there are so many experts predicting a very bad year for the stock market. On one very accurate prognosticator predicts that the market will dive to 1,150 by the end of this year. That means the average IRA or 401k holder will lose approximately 30% of its value. Even if he's only half wrong, that's devastating to so many Americans. Most financial advisors will tell you to diversify. But then they'll say, hey, we'll buy different types of securities, stocks, bonds, mutual funds, annuities, yada, 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 but it's all part of the same system. Real diversification means investing in different asset classes: cash flow real estate, notes, partnerships, oil, gas, gold, silver. This is real diversification when you're in different asset classes. Oil hit an all-time low. This was posted yesterday or the day before. I don't know exactly when, but oil hit an all-time low today. So why wouldn't you buy it? Buy low and sell high, right? If oil is at an all-time low, what are the chances it's going to go higher in the future, right? And if the stock market was at an all-time high earlier this year, what are the chances that it's going to go lower in the future? I mean, and that only just makes sense, and like we talked about, the stock market, and it drives sort of the economy a little bit. And if the stock market is to crash like that, and people are going to get hit, their IRAs are going to get hit, how many people are going to be able to buy houses then if their IRAs get pounded again? And then what's going to happen to the price of houses if all those people that have IRA money that are potential buyers right now all of a sudden lose another 15 to 30% out of their IRAs, their 401ks? how many buyers does that take out of the market? What's that going to do to housing prices?
Yeah, exactly. That is a great post there that our friend did on Facebook, because think about that. Isn't the idea to sell low and buy high? I constantly ask myself the question of why is it that so many people, and this is what our whole system is predicated on, how these big banks and hedge funds make money is based on this stupidity. Why is it then that most people think investing in an asset class that has depreciated to its lowest levels ever, why people think that's a bad time to invest? Do you know statistically most people invest at the top of the market in anything that they're buying, stocks, real estate? It's like they wait and they jump in the bandwagon. You know what? Get yourself outside the box, think a little bit, take a little risk, and think about it. If the concept is buy low, sell high, I wish I was trading on the futures market right now, because I'd be dumping a lot of money into oil and silver and gold, because right now the prices of these commodities are actually so low in relation to where they really should be. But if you look, Paul and I just did a hangout 20 minutes ago, specifically talking about the gold and silver prices. And there's so much that goes behind this. But right now is the perfect time to kind of put some money into those assets. One of the reasons being is that let's go with silver. And this is the same thing that's going on with oil and gold, by the way. So silver, this is just an example, but it doesn't exist in a vacuum. It costs right now more money to pull silver out of the ground than what you can actually go out and buy an ounce of silver for. So silver mining companies are losing money producing silver right now. So what does that mean? They're cutting production, so they're producing less silver, and they're holding back silver in reserves because I'm not going to sell it right now, right? What is this doing is creating a shortage, because silver is not just a monetary metal, it's also an industrial metal. It's being consumed, it's being used up. Right now what's happening is because of these low prices, same thing with oil, all the smaller oil companies and smaller silver mining companies that are losing money are getting out of the business, and they're selling their businesses, these companies, these mines, for pennies on the dollars to the big boys, to the conglomerates, to the centralized economic powers, if you will. And not only that, production's being cut, and it's creating an environment where the demand for silver actually hasn't decreased. In fact, it's increased since 2013, as we saw $20 come off the price of silver. So something else is going on here. Artificial price fixing, I don't know. It's happening in real estate. Why wouldn't it happen here as well? You may say to yourself, well, what's the incentive to cut prices rather than raise prices like they're doing in real estate? The incentive is positioning, because if you can, let's just put you in the position here that you could drive prices in any direction you want. Right now, when silver was at a high at 35, how do I make money when something's at a high? Got to buy low. So if I create an atmosphere where this price gets driven down, now's the time that the big institutions are picking up silver and gold. As the public that has been buying and scared to death that we're buying it at maybe $1,800, $2,000 an ounce, or started buying it at $30, $35 an ounce, and now it's down. They're getting scared, and they're like, "Ooh, the bull market's over." They're selling it low. Once again, the public bought it high, they're selling low, and that's exactly what they want you to do if you think about it, because it's positioned to go up again, and really in a position to go up again since production's being cut in silver, oil, and gold with the prices coming down. Because if it costs more to produce the product, they're not going to produce it. But that demand is always there. It's still there. So when the demands aren't met, or something happens, the price of those commodities are going to skyrocket. And the skyrocketing price of those commodities will affect your life, especially gasoline.
Mm-hmm. Gasoline. Yep, exactly. And I mean, just think about it. I mean, you've been on this planet long enough to know and to see that everything, all these markets, everything always goes in cycles. It's up, it's down, it's up, it's down, it's up, it's down. And if you look at look at it historically, right? It's up, it's down, it's up, it's down, it's up, it's down, it's up, it's down, then it's up, way up, and then it's down, but it's never down as low as it was before. And then it's like it like finds a whole new plateau. And now on this new plateau, it's up, it's down, it's up, it's down, it's up, it's down, it's up, it's down, it's up, it's down. And then all of a sudden, at some point in time, some drastic major thing happens, and then bam, it's way up again. And then now it's down, but it's not down as far as it was before. It's always a very slow stepping stone up. They're always going up. They just don't happen, they have this up and down and up and down and up and down cycles. I don't know. Maybe it's fixed. Maybe it is purposely done to have all these up and down cycles to get people scared, out of the fact that, oh wow, I got in and then it went down and then I had to sell and then it went up and then I got screwed and then they don't know what to do, and then so they don't see the signs of this long-term stepping stone action, that the reason you buy these commodities, whatever it is that you're buying here, everything that you're buying here, is not for the short-term up and down game. You got to look at the long-term overall gain. That's where you make the money. That's where the big players know where the difference is. They see, when the price goes up a little bit, when it's doing the little small ups and downs and ups and downs. Let's just say 500 is the number, right? Well, okay, it's up to 550, it's up to 650, and people are buying, and the big people aren't buying. They wait till it drops down and it goes to 350. Now they're buying. You're selling, they're buying, and then it goes back up again. Now it's back at 500, and people are getting, oh wow, it must be good again. It's back to normal, and then it's going up. Oh, it's going up. It's time to buy again. They start buying, and then all of a sudden it goes down, and they they're buying when you're selling. They're selling when you're buying, and they're making their money along the way, and then they're getting themselves prepared for the big jump. So they're accumulating massive amounts so that when it does that, when it settles out to that next plateau, I mean, which is generally anywhere from 2, 3, 4, 5 times more than the previous plateau, they just increased their wealth 2, 3, 5 times, where you were just playing the piddly game along the way and you never did anything, because once it went so high, or when it went so low, or whatever, however it worked out, you were scared and you jumped out.
Something you said too, I think that needs to be pointed out to people, put this into perspective. Something unique has been going on for the last 103 years. In fact, historically, if you look at 3,000 years of economic history, it's not really that unique. The last 3 years in American banking has been unique in regards to the value of currency. And the reason I say that is because in 1913, there was the creation of the Federal Reserve banking system, centralized banks issuing the currency for the United States of America, taking that power from the Treasury. And they've slowly have been decreasing the value of the cash in your pocket since 1913. In 1932, I believe, they did a gold confiscation in the United States. So at the time you had a gold coin, it bared the number 20 on it. It was $20. Okay. In 1932, there was a gold confiscation, and what it required people to do with their gold was to take that $20 gold coin, and now you had to deposit it in a bank. And in exchange, people thought they were doing real good. They gave you $35 cash. But all they did, because at the time, the U.S. government or the U.S. economy, or the currency, the currency of the United States was pegged to gold at the time, gold and silver. So what they did is they always valued an ounce of gold at $20. So when everyone came in and I shouldn't say they came in of their own free will, it was required. It was a gold confiscation. They were required to change in their $20 gold piece in exchange for $35, and they thought they were doing good. No, they were actually broke even, if you will, because that $20 gold coin, paper equivalent, is $35, because no longer could you take a paper dollar in 1932, a $20 bill, and trade it in for an ounce of gold. If you wanted an ounce of gold, you'd have to trade in 35 of your dollars. They just changed the value. What this did then was take gold out of the U.S. citizen's pocket, replace it with paper currency. that now had, but people didn't understand it. Lack of education. They're like, now I've got $35, but that $35 is only worth $20. But guess what else people didn't have an increase in when that happened? Hourly wages. So where they were getting $1 an hour before, the average person at that time made like $1.25 a week, maybe less. I don't want to misquote this, but people were, say, let's just use $1 as an example. People were making $1. Well, they lost that dollar wasn't worth $1 anymore. It was actually you'd have to have made $2.50 for that dollar to be worth $1. So when they did the gold confiscation, in order to give people the same purchasing power, everybody would have needed a raise of 105% or something like that. That's what's going on here. So hold up your graph because I want to show somebody something. Here's a basic overview of, I can't see it, basic overview of gold and silver. But do you see every time there's a decrease, increase, and a plateau, the plateaus get a little bit higher and higher, right? And now gold's sitting at $1,100. Do you know that $1,100 has the same purchasing power as $400 did in 1980? So gold really right now has the same value as it did 40 years ago. What has less value? The paper dollars used to buy the gold. That's all. So you've got to realize what that means.
What it basically means is that in 1980, 1990, hell, even all the way up to almost about 2000, you could buy a dozen eggs for about $1, maybe a little bit less, maybe a little bit more. Now, gold, and that's when gold was floating at about approximately $400 an ounce. Now that gold skyrocketed, settled back at a new plateau, about 3 times that amount, at about $1,200 an ounce. What do you pay for a dozen eggs now? You pay like $3, $4 for a dozen eggs. The price of the eggs went up 3, 4 times. But gold maintained the value. It can still buy. You can still turn in that gold, and it's like going and buying your eggs for $1 a dozen. But the paper dollars, you now need 4 of them to go buy your dozen eggs. That's what he's talking about.
Yes, absolutely. That's great. So, I want to bring it back to a little bit with real estate pricing again, because all of this stuff, all these little different asset classes that we're talking about here and price fluctuations, it's all interrelated. You got to take a macro view of all this stuff. Oh shoot, my face isn't even on the computer right now. Oh, there it is. You've got to kind of take a macro view of all this stuff and see the big picture here, because all this isn't happening in isolated vacuums. This is all kind of tied together. So with real estate prices, I find it very interesting. Again, we'll bring it back to the price fixing that's going on. One of the investors that Paul and I work with recently told me that he hooked up with a guy that's working with a hedge fund, and they just recently came through to different markets all over the country, Phoenix, and they bought any property under 100K. They didn't care about what neighborhood it was in, what condition it was in. All they cared about is that they came and they said, we're going to buy 100. I don't know specifically who put together the package for this hedge fund, but they came in and just bought a package of everything under 100K. Think about that for a second. They didn't care what the ARV were. They didn't care about any of that. All they cared about was getting a big bunch of houses at this price point, average dollar cost averaging what it's going to be to fix up each one, and get renters living there. Because guess what there is more of? Renters. Because the American dream of buying a house, talk to most people, the millennials they call them, their dream is not to buy a house. In fact, that is actually decreasing. The American dream of buying your own house, maybe not in our age group. I'm 38, 37. Let me give myself 2 more months of being 37 here. Paul's a little bit older than that. I don't want to blow up his spot. And, he looks like a young guy. So he is 46. He's 46. And basically, it's like we're kind of dinosaurs. Really, my generation is that gap between the internet and the millennials and the old school way. I'm right there in the middle, you know? And so I see it really from a point of view of being in the middle of both these generations. But how are you going to make money? How are you going to have a future? The millennials, that's the future. What do they want to buy? What do they want to invest in? What are they
being conditioned for right now? Everything in this world, especially on the internet, anything that you want to participate in on the internet is coming down to a subscription and a monthly payment. And everything, I mean, even look at the phone services went from contracts to monthly payment plans. Okay, everything in this world is changing to this whole concept of a monthly payment, and this younger generation is getting used to making that monthly payment. And so that's where, you know, it's all about, hey, why do I have to own anything? I just own a part of it. I just pay for my share on a monthly basis.
That is very key. So that's something you got to think about, is what do the younger generations want? You know, it's all over marketing. Think about it right now. What's the big movie? So big that you see city signs that say, use the force, buckle your seatbelt. This relates because this marketing geniuses, Star Wars, they've captured 3 generations of fans because the movie came out in 78, 77, the first one. Okay. So you had all the 5-year-olds to 50-year-olds in that year. Then they came. So basically, each of the next 2 Star Wars movies came out in about a 10-year time frame. So in 77 to 88, they released 3 movies in this. What would you call it? In this endeavor, this brand. This brand, because Star Wars is a brand. It's not a movie. Don't fool yourself. The movie is a 2-hour commercial to sell toys and dolls and rocket ships. But they've captured an entire generation with those 3 movies in that 10-year span, right? So what did they do? They waited till about 1996 or 7 when they came out with the next 3 movies in the series, to grab a whole nother 10 years of another 10-year gap of generations. But guess what they had in the 90s? The other 3 generations of fans. So they're also not just grasping new fans in the market. They purposely have a product that's going to harken back to the fans from 20 years ago. And now what are they doing here in 2000 and going into 2016? They released the first of their 3 movies that are going to be released over the next 3 to 6, 7 years and capture another fan base. And they have crossed now, 1, 2, 3 generations, maybe more because of the span of the movies, their brand has sold to. And right now this brand, they've already have their capture, but now they're selling it to the millennials and grasping a whole new generation. What's the point of this Star Wars analogy is that good marketing, the government, propaganda, good marketing, the economic masters, great marketers, trust me, are always programming the next generation. Not Paul and I. They're reconditioning Paul and I. They're reconditioning our age groups. But it's straight up it's the programming.
Yeah, and you
baby boomers on the younger generations who haven't developed their own ideas and mindset yet.
Yep, and you baby boomers, they're just done with you.
Think about how done they are, because they're talking about pre-retirement, as we talked about in another hangout. They're talking about the loss of pensions. They have no regard for what their inflationary banking system is doing to retirees. And with this new healthcare and death panels and all this other stuff, yeah, they've really given up on the baby boomers, I feel. But that's where the entrepreneurs come in. Because now let's take it to wholesale real estate. And what that post is saying is, you know what? If we can learn this business, wholesale real estate, and make the right connections, think about your friend who has $30,000 sitting around in a 401k, and you figure out the wholesale business, and you create a machine that can flip properties every 60 to 90 days, and you can be getting them 12 to 18% on that money in perpetuity. There's so many ways that we could help the baby boomer generation with real estate. And it's not just real estate. There's a lot of other things people can get into. This is just one vehicle, but and a very timely vehicle, I think, to get into. There's millions to be made in wholesale real estate and opportunities in over the next 3 to 5 years that won't exist in 6 years, 7 years. So, I mean, this is really important information to be aware of, because for Paul and I know it kind of what motivates us is to not only share this information, but implement a strategy, knowing this stuff, to benefit from what's to come.
And to create a community through which others can benefit through this as well also. And that would obviously be the Property Noodler system. we are building a community here of potential wholesale real estate investors, people who want to get into this, people who want to get out there and get themselves positioned right now to be in the right place at the right time and become the right person along the way. And that's what this is all about. This is just some information here that, I mean, if you're having any thoughts about getting into wholesale real estate, I don't know. Why wouldn't you?
Especially since the barrier to cost is your own creativity and willingness to do it. If not having money is no longer an excuse. Having a full-time job is no longer an excuse. You have a day off during the week, spend that day off doing something that can get you out of that job. Got a great guy that I met with last week, again on Wednesday, and again yesterday. The guy is following me around like a dog, trailing me, hanging on every word of wisdom, if you will. But I love that guy's enthusiasm. Basically, I'm building him up to say, hey, you know what? He has no money. He has a full-time job, and he's willing to spend each day he has off hanging out with me to learn to do this so he can get the hell out of that job, because he knows it's a dead end. He's been there for 20 years. He knows he's never retiring. He knows he's never going to stop working unless he makes a conscious effort and a choice to stop working by getting into something that can produce real income, give you back real time in your life, and let you fulfill your dreams in a real way. And stop living in that someday I'll be rich, someday I'll retire. Because I'm sorry, if you're working a job, the average person, hey, if you're a CEO making $500 million a year, I'm not talking to you. I'm not talking to you. Okay. I'm talking to the average guy in his cubicle. You guys doing tech support. You guys, you pharmacists and nurses. You think that you have a secure job because you're a doctor or a nurse? You only have to look at what's going on in the healthcare system in the United States to know that your effing job ain't secure.
Yeah, what are you making? $100, maybe $200,000 a year? Okay, feels good right now. What happens if everything goes up by another 5 times in price?
I will say this.
How's that $200,000 going to feel then? When sure, now you can make $300,000, but everything went up 5 times. How's that going to feel?
Right. And I'm not poo-pooing you. If you love nursing or what you do and that you feel is your purpose, you're probably going to be, if that you really truly love what you do and you feel that that's your purpose and that's what's right for you, and you feel successful doing it, that's great. And you know what? The person like you'll be fine if the economy crashes, because you'll always find a way to perform your skill or your work. But it's those drifters that haven't found their purpose that are screwed, because they don't have a purpose. They don't have the drive that those with a purpose do. And that's who this stuff is for. Find your purpose.
But even those with the purpose, who will always be able to perform the duties that they love to do, something on the side now to create put yourself in a position to where, you're having an issue might put you in a place where you can become the leader in your arena and create something that never existed before, instead of just being a person who is just drug along, through the doldrums of finding that exact thing that you're working on. Maybe by then you're looking at the fact that, hey, maybe I can create something new and different here that's unique and helps people even more in a better way than what I've been doing over the past, decade or two or whatever it's been. So that's another reason why to, take what you're doing now and get something else going on the side to build some real wealth, some backup, some secondary support, so to speak, so that, whatever your dream might be or what might come down the road, who knows, you're going to be positioned to be able to take advantage of it one way or another and continue on doing the thing that you love to do.
Absolutely. And maybe you could get in a position where you do the thing you love to do because you want to and not because you have to earn a living. And then that passion becomes like magic. And, if let's say, if I was someone who loved nursing and loved helping people, taking it to the next level, if I can become financially free, maybe I can volunteer my time in a foreign, in a foreign country, like go down to South America and donate my nursing skills, and really that would be really fulfilling and get me out of the country and see the world. You could turn those passions into dreams. I mean, you can dream so big, whatever your purpose may be. But what Paul and I really want to drive home is the fact that, hey, wholesale real estate's one vehicle. There's many other vehicles, but find your vehicle, something outside of your job to help you earn some extra income. And the reason we're so hot on what we do is because we love it. We're passionate about it. And everybody we bring into our team and that gets involved ends up falling in love with it too, because it's fun and because we're helping people. And by helping people, we're helping ourselves. And it's a great business. It gives the average guy, the poor guy, any guy out there the opportunity to get involved with something that can make them a lot of money. And the only investment they have to make is their willingness to learn and their willingness to get out there and do it. And that's what's so awesome about wholesale real estate. You're the only barrier to your entry is you. Having no money is not an excuse. Having to work a full-time job, like I just pointed out, is not an excuse. Like I said, there's a guy right now that he works his 40-hour job week. He has 2 days off, Wednesdays and Thursdays, and he's committed to hanging out with me every Wednesday and Thursday for the next couple weeks to train and learn this so he can go out on Wednesday and Thursday on his own and land deals and start landing deals regularly to where he can quit the job and he can spend, maybe he figures out a way to only spend 2 days a week and get out of his job, and he doesn't want to work another day than that because now he wants to play for 5 days a week.
And with that, O universe, I ask not for more riches, but for more wisdom with which to make better use of the riches given to me at birth, consisting of the power to control and direct my own mind to whatever end I might desire. And that's really what it's all about, directing and controlling your own mind to whatever end that you desire. You can do whatever the heck you want, and you can be successful at it. And wholesale real estate's one of those avenues. And if that's what you're after, hit us up at propertynoodlers@gmail.com. All right, everybody. Have a great session ending here and a great celebration in Pinnacle. And we'll see you back here on New Op Day, where we'll get right back into the whole relationship endeavor of how to win friends and influence people. Bye.